Solve problems. Accounting equation. Fundamental accounting equation. A is equal to L plus OE. Assets is equal to liabilities plus owner's equity. Problem. Activity 1. Know me. Answer the following questions. 1. What is the fundamental accounting equation? Question 2. What are assets, liabilities, owner's equity? Activity 2. Find the missing amounts, assets, liabilities, owner's equity. 1. 650,000 assets, 340,000 liabilities, owner's equity, dash. 2. Assets, dash, liabilities, 295,000, owner's equity, 305,000. 3. 967,000 assets, liabilities, dash, owner's equity, 660,000. 4. Assets, 788,000, liabilities, 345,000, owner's equity, dash. 5. 845,000 assets, liabilities, dash, owner's equity, 533,000. 6. Assets, dash, liabilities, 588,000, owner's equity, 987,000. 7. Assets, 1896,000, liabilities, dash, owner's equity, 1310000. 8. Assets, 2 million, liabilities, 967,000, owner's equity, dash. 9. Assets, 3,708,000, liabilities, dash, owner's equity, 2,055,000. 10. Assets, dash, liabilities, 1,123,000, owner's equity, 1,933,000. Activity 3. Below are statement of financial position accounts. Classify these accounts by writing them under their proper columns. Land, accounts payable, accounts receivable, loan payable, notes payable, furniture, bonds payable, cash, buildings, trades payable, taxes payable, prepaid insurance, notes receivable, prepaid rent, accrued liabilities, truck, mortgage payable, unearned rent, supplies, equipment, utilities payable, assets, liabilities. Under assets, current assets, non-current assets. Under liabilities, current liabilities, non-current liabilities. Activity 1. Question 1. What is the fundamental accounting equation? Answer. Fundamental accounting equation. The fundamental accounting equation seeks to explain the relationship between the assets constituting a business and the funds that have been used to finance their purchase. Also known as the balance sheet equation. It forms the basis of the double entry system of bookkeeping. Fundamental accounting equation is equal to assets is equal to liabilities plus owner's equity. Question number 2. What are assets? What are liabilities? What is owner's equity? Assets. Assets represent the economic resources of the entity developed to generate future income. They can be fixed assets held by the entity for a considerable period of time and used year after year. Examples include land, machinery, computers, etc. These are also current assets. There are also current assets forming a part of the company's working capital. These assets keep changing from asset to money and back in the ordinary course of work. Examples include stock, receivables, advance payments, etc. Lastly, there also exists a class of assets called the intangible assets. They refer to assets such as goodwill, patents, copyrights, trademarks, etc. Though not tangible, these assets bring huge value to an organization. Liabilities. Liabilities refer to the amount a business owes to outsiders. They can also be classified as current and non-current borrowings. Non-current debt refers to the long-term obligation payable within a period of not less than 12 months. They are generally for financing projects with longer maturities. Current borrowings refer to the short-term obligation a company has to take on in the regular course of business. For example, buyer's credit for purchasing a stock or a bank overdraft. Mathematically, liabilities equals the difference between total assets and owner's equity. Total assets minus equity. Now, owner's equity. It represents the owner's own investment in the business, extending from the fundamental accounting equation. The owner's equity equals the total assets held as reduced by the external liabilities, assets minus liabilities. For this reason, it also referred to as net assets. All adjustments for profits, reserves and drawings reflect in this account. Activity 2. Find the missing amounts. Let us fill the missing amounts in the following 10 equations. Equation 1. Assets 650,000, liabilities 340,000. Owner's equity is 650,000 minus 340,000, 310,000. Transaction number 2. Assets dash liabilities 295,000, owner's equity 305,000. Therefore, assets is equal to liabilities owner's equity 295,000 plus 305,000, 600,000. Transaction number 3. Assets 967,000, liabilities dash owner's equity 660,000. Therefore, liabilities is equal to assets minus owner's equity, that is 967,000 minus 660,000, 307,000 is the liabilities. Transaction number 4. Assets 788,000, liabilities 345,000, owner's equity dash. Owner's equity is equal to assets minus liabilities, 788,000 minus 345,000, 443,000 is the owner's equity. Transaction number 5. 845,000, assets, liabilities dash. Owner's equity 533,000. Therefore, liabilities is equal to assets minus owner's equity, 845,000 minus 533,000, 312,000 is the liabilities. Transaction number 6. Assets dash liabilities 588,000, owner's equity 987,000. Therefore, assets is equal to liabilities owners plus owner's equity 588,000 plus 987,000, 1,575,000 is the assets. Transaction number 7. 1,896,000 is the assets, liabilities dash owner's equity 1,310,000. Therefore, liabilities is equal to 1,896,000 minus 1,310,000, 586,000 is the liability. Transaction number 8. Assets 2 million, liabilities 967,000. Owner's equity is equal to assets minus liabilities 2 million minus 967,000, 1,033,000 is the owner's equity. Transaction number 9. 3,708,000 assets dash liabilities. Owner's equity 2,055,000. Therefore, liabilities is equal to assets minus owner's equity 3,708,000 minus 2,055,000 is equal to 1,653,000 is the liabilities. Transaction number 10. Assets dash liabilities 1,123,000, owner's equity 1,933,000. Therefore, assets is equal to liabilities plus owner's equity 1,123,000 plus 1,933,000. Total 3,056,000 is the value of assets. Activity number 3. Let us classify the accounts under proper columns. Land is a non-current asset. Accounts payable is a current liability. Accounts receivable is a current asset. Loan payable is, if it is long term, non-current liability. Notes payable is current liability. Furniture is non-current asset. Bonds payable is a long-term liability. Cash is a current asset. Buildings is non-current asset. Taxes payable is current liability. Prepaid insurance is current asset. Notes receivable is current asset. Prepaid rent is current asset. Accrued liabilities current liability. Truck is non-current asset. Mortgage payable is long-term payable and long-term liability. Unearned rent is current liability. Supplies is current asset. Equipment is non-current asset. Utilities payable is current liability. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.